Good morning.
Morning, how are you?
I'm all right, thank you. Thanks again for doing this. As I said to you earlier, I understand it's a holiday in Japan, and so we're very grateful that you've taken some time out to talk to us. As usual, if you wanted to just kick off with a sort of 5-10 minute introduction to what you're trying to do with the fund, please.
Sure. Well, the JPMorgan Japanese Investment Trust is the largest dedicated Japanese investment trust. It is a member of the FTSE 250 and is the only dedicated Japan investment trust that is both gold rated by Morningstar for the process and also has 5 globes for sustainability. In a nutshell, what we're trying to do is be at the heart of Japan's new growth and be the premier vehicle for investing into Japan. And the key points are that we are all based here on the ground in Tokyo. And then the way that we invest, we're looking at high quality businesses that will compound earnings sustainably over the long term. And when we pick stocks, we are long term and high conviction, and we adopt a very clear growth and quality approach. And we're also unconstrained. So if we don't like stocks and sectors, then we simply don't own them. And if you look over the last 10 years, investing in this way has led us to outperform the index by over 1.8% annualized. So you go on to the next slide, you can see the pictures of who we are. So we've got 25 people based on the ground in Tokyo. We have an average industry experience of 18 years. And we've worked on average at JPMorgan for 13 years. So it's a team with great longevity and experience of the Japanese market. And not only do we have this team based on the ground in Tokyo, but we also have JPMorgan asset management analysts all over the world, which can be incredibly valuable, particularly because in many areas, Japan is somewhat lagging behind global trends. So you've got that local knowledge combined with that kind of global insight can be incredibly powerful. Looking at how we invest on the next page, the first and most important question that we want to answer is this a business we want to invest in? Do we want to own this company in the long-term view? So we never start off by saying, oh, this is cheap, could we get it into portfolio? Like, we assess and the quality of that business and do we think it makes sense on a 3, 5, 10-year view? And after that, we go on to look at the valuation. When we rate companies, we give them a rating which is either premium or quality or trading, depending on how we see the prospects. In Japan overall, we give the lower rating trading to 75% of companies. But for the trust, we have completely the opposite structure. So it's dominated by premium and quality companies, what we think are the very best companies in Japan. I think it's easiest to talk through an example, which you can see on the next page. Keyence is a company that makes sensors. It has been the biggest position in the trust for over 12 years now. So, we really want to find winning companies and back them for the long term. It's a great example of the kind of new growth that we see Japanese companies offer. So whereas people tend to associate Japan with things like cars or banks or consumer electronics, actually there are completely different areas where we think Japan is very strong. Actually, there's an article in The Economist this week pointing to companies like Keyence and Fast Retailing, which owns Uniqlo, which are very big. In fact, Keyence is the second biggest company in Japan right now, but are not generally well known. And the reason why it fits so well into our framework is firstly because it has outstanding economics, has very high growth rates because we see more countries automating, more industries automating, and as wages go up globally, and also there's more tension with China, we see those impetuses only kind of get stronger. It's a very profitable company. It makes an operating margin of over 50%, which probably makes it the most profitable industrial company anywhere in the world. it has an extremely strong balance sheet. We're talking billions of dollars in net cash. It has very good duration in that we can't really find a strong competitor to what they do. And not only that, but it is also increasing its market share. And when we come to look at its governance, it is quite unusual in Japan that its employees are heavily incentivized. So you can see on the top right chart there that it actually pays its employees probably double what you get at any other machinery companies in Japan. And if you look on the bottom right, the consequence of this is that over time, earnings have continually risen or estimates continually gone up, and the share price has broadly tracked that over a very long period of time. That's basically what we're trying to do, to identify winners and hold them for long periods of time, which is reflected in pretty low turnover in the trust overall. So if you look at how we've performed on the next page, I've been the lead manager of the trust since 2010, which I think maybe makes me the longest serving manager of any of the Japanese investment trusts. So you can see the record back to 2010. We've done well in the long term, but the performance is volatile. We have a very high active share. We look nothing like the benchmark. I think absolutely we must avoid certain areas and really focus on the areas of high conviction. But you can see that performance is volatile. So it's important to understand when we do well and less well. So we just look at a couple of examples. 2020, the pandemic year, in the beginning, their companies had no sales, but because our companies tend to have very strong balance sheets, we did well. And also because we're looking at where companies' industries will be in 3, 5, 10 years' time, we were already positioned for things that would, there's going to be more e-commerce, or there's going to be more cashless payments, or there's going to be more automation. We already owned all of those areas. Similarly, we do well when there's a kind of low growth environment or steady growth, and companies that deliver on earnings do well. And we saw that in 2019. But you can obviously see 2022 is a very tough year, certainly the toughest year that I've had in my career as a 20-year career managing Japanese equities. And broadly speaking, that was because, I think you alluded to this earlier about how interest rates have gone up and how that's affected valuations. But broadly speaking, there's no issue with the fundamentals or what was going on at the companies we own, but there was a big de-rating of those companies. And although people tend to think 2022 was a year where unprofitable tech companies did badly, actually, in Japan at any rate, it was the most profitable companies with the strongest balance sheets and the best free cash flow and the best industry outlooks and competitive positions. This is the group that de-rated. And if you look at the next slide, what it means for the fund overall is that it trades on the lowest PE that it has really for a number of years. Yes, it's a premium to market. We get much higher return on equity, much higher growth, much stronger balance sheets. And just to highlight another couple of the features of the trust, on the bottom left, you can see we go across the entire market cap spectrum. We really want to pull the levers of the investment trust structure. And, if there's opportunities at the less liquid end, then absolutely we're happy to have them. You can see our active share is 90%, so look nothing like the benchmark. And on the right-hand side, you can see that we have much higher exposure to what we call premium and quality companies, the very best companies, compared to the index. In fact, it's the complete inverse. Just briefly looking at the top positions or what's actually in the trust. I think first thing to say on the bottom right is when we don't like companies or sectors, we will just have zero weight in them. I'm not looking for us to buy the least bad companies in certain areas, but when we can find great opportunities, we're happy to absolutely back them. So I talked about Keyence, but when we think about the new growth that some companies have, you take an example like ASICS, which is a company that lost its way a few years ago, but is the global #1 in running shoes by people who run a lot. New management came there in 2017, really driven their margins higher, but a long way to go and a long way still to push on things like increasing the number of sales outside of Japan. It's this type of very strong brand that we are really thinking will be the big drivers of Japan in the future, rather than those things that people associate with the market. And to look at it another way on the next slide, you can see very strong themes within the fund. And these have been very consistent over a long period of time. This is exactly what you get exposure to with the JPMorgan Japanese Investment Trust. So areas like digital innovation, it's astonishingly still only roughly 11% of retail sales in Japan are online. That is extremely low relative to the rest of the world. Or still many processes in Japan are using paper or fax even, and we're replacing them slowly, but we're behind the rest of the world, and that creates huge opportunity. I've touched on automation with Keyence, but we also have these global strong brands like Uniqlo or like in computer gaming, where over 20 of the top 50 selling computer games of all time are made by Japanese companies. We try to look at things like the demographic change, which is clearly an issue for a lot of Japanese companies, but there are a few companies for which it is a very strong, powerful tailwind, and we only need to focus on them. We only own 63 companies out of a total market in Japan of over 4,000 companies. Good leading companies in medical technology. I mean, they've got market shares for over 50%, and then in environment where we see Japan again behind in things like renewable energy, but still a very will follow a similar path to the rest of the world. So just to sort of bring it all together, James, on the last page, it's a high conviction, concentrated strategy, quite a clear quality growth tilt, good long-term track record, although definitely with volatility, and we really try to use the tools available to us investment trust structure, whether that be gearing or being able to go across the entire market cap spectrum. We do all of that from our base in Tokyo, which I think over time is becoming more and more important to be based here, simply because the coverage of this market continues to drop from the sell side. Actually, half of companies in Japan have no analyst coverage at all. So very important that we're here with a big team. And I hand it back to you.